to the Rogue Trader podcast with me, Nick Leeson, joined by Jason Sen today to talk about markets. There's probably a couple of themes I just wanted to touch on with you first, Jason, if you don't mind, just about trading in general and what people are doing and rabbit holes that they get themselves caught in, because yes, I still do get caught down those rabbit holes, and you know, I know you've spoken about it from time to time as well. But I think something that really struck me when I met somebody for a coffee just this week, and he was an ex-life trader as well. Spent a lot of time on the market, still trades and so on. And I think he actually worked for David Kite all of those years ago on the floor.
I probably know him.
I'm sure you do, and I'll share the name with you afterwards. We should talk about that. But right. You know, the thing that kind of came across, and we were talking about people chasing losses and adding to losing trades and those sort of things, which are all, you know, we all know you shouldn't really be doing. But I think what we agreed about it was that it probably comes down to the way that you're taught. And, you know, that really struck a chord with me because, you know, I was in Singapore and everything was really self-taught. I might have somebody in Tokyo who's trying to steer me as regards certain things. You know, there was somebody maybe in Hong Kong who was supposed to be looking after something that I was doing as well. But there was no real training, not of the like that I'm sure that you got on the trading floor, and this particular individual got with with Kite Futures that he was probably working for at the time as well. And he said a lot of that stays with him, and there are things that, you know, I might find myself doing that he would absolutely never do because of the way that he was trained. And, you know, it just struck a chord with me about how important that initial training is, because, you know, I'm still adding to losing positions. I'm still, you know, I still find myself looking for a bottom from time to time. Whereas, you know, and I do a lot of that on impulse and emotion, as opposed to yourself, where you're looking at charts and you've got a rationale or a reason for doing it. But maybe talk about that a little bit, about the, you know, your initial training, or you know, who held your hand through those first initial phases on the trading floor.
Well, I think that's interesting, because you and I did come from two different backgrounds. I was kind of thrown into the trading floor, and you were obviously corporate. We didn't get any training either. We got minimal training, but we were pretty much thrown in the pit. So it was sink or swim. And I think it was probably the same, you know, as you said, same the case for you. And you learned on the job. You learned by trial and error. But, you know, okay, you trade by instinct and you call yourself impulsive, but that's also decades of experience that is in your brain. So doing that at your stage of your career isn't such a bad thing. Doing it when you've only been trading 6 months and you've got no process, you don't really understand how to identify a trade opportunity, you don't have a strategy, you don't have a trade management strategy, then it's foolish, because there's so much information out there now. I'll tell you what I was thinking about the other day, Nick. Okay, someone like yourself at Barings or someone at Goldman Sachs in the 90s, the amount of information they had at their hands then with news flow from Bloomberg and Reuters and whatever else is probably nowhere near what a retail trader can get now for free. Yeah, and also the training. Just on YouTube, there's so much free training, free information. And if you want to pay for training, there's endless courses and mentors out there. So there's no excuse for not getting educated.
No, I agree. I mean, just one thing out of this conversation that I was having the other day, you know, like he had a very strong role model in terms of, you know, David Kite and, you know, many of the guys that would have worked with him. You would have also had fairly strong role models throughout that initial period, you know, that were, you know, leading you through it. I know it was very much sink or swim, and that's the way the markets were, certainly in those days. But, you know, there were some strong role models throughout that period, I'm sure, as well.
For sure. There were the heroes on the floor. David Kite is a trading genius, no question of that. So if you were lucky to be able to learn from David Kite, you were learning from one of the best.
100%. One of the other things I think really struck a chord for me last week. I was having a really good week last week. I think through to about Thursday lunchtime, everything that I touched was going very, very well. Then Thursday lunchtime, and this is a genuine story, Jason. I think I took the dogs out for a walk because I thought, you know, I'll step away from the markets for a bit. Left one position on, which I think was long Dow, and then the Dow started to fall apart, and of course I fell apart with it. So it was, I suppose, the second question for me, for lots of people out there who are listening and they're trying to work this out, is when do you step away? Do you set yourself a target? You know, like for me, like everything was going very, very well on Thursday, up until Thursday. So I think I was up big on Monday, broke even on Tuesday, up fairly big again on Wednesday, and up until about 1 o'clock on Thursday, everything was flying. But I still got that, I don't know, that desire to stay in and go again. And I'm sure you felt it many, many times. Whereas, you know, I remember so many stories on the floor where people have, you know, they've made their money on a Monday or a Tuesday, or maybe a combination of Monday and Tuesday, and then you don't see them for the rest of the week. I seem to be far more compulsive than that. And I'm sure a lot of retail traders are.
Well, each person has their own approach. You know, you're successful at what you do and you don't mind swinging the bat. So you take the rough with the smooth, and, you know, you can absorb a bad day. Not everybody can trade like that. I can't trade like that, if I'm honest with you. My numbers are really small. I don't trade that regularly. I kind of lost a bit of interest in trading. I love the analysis and I love, you know, identifying levels, but actually the actual mechanics of trading kind of, not so exciting to me anymore. But yeah, if you want to be a disciplined trader, then yes, my rule is plan your trade your plan. So identify why, you know, give me a reason why you're getting into the market. For example, I can show you in a minute. I had some great support levels in the stock markets on Friday, so I jumped in. They overran a little bit, but not too much. And then I know where my stop loss is. If my stop loss gets hit, I'm just out. I don't try and second guess. And then if it works, then I've got a trade management strategy. I'll trail my stop when we get to target one, maybe take some partial profit, that kind of thing. Sure. I'm a big believer in plan the trade the plan.
No, look, I totally agree with you. I just seem to be, there's a word for what I'm thinking of what I take liberties from time to time, I suppose.
But you know your boundaries.
Especially when things are going well. So, you know, and it's one of those things that I certainly need to curtail a little bit. But you're right. Everybody should have a plan, and they should, you know, as much as they plan that trade, they trade the plan as well. And I think it's great advice.
You know your boundaries, and you know the thing is, you know, you can have some great days and some great weeks that a really disciplined trader wouldn't have, because we would be taking, you know, I'm going to say we, because I would be taking profits sooner and I'd be super disciplined. But when you get a feeling and you're right, I know that, you know, you bag some good money.
Yeah, no, you are right. I just like to keep it sometimes.
Yeah, we're traders. We're never going to keep it.
No. All right. So let's get on to the important stuff that people want to hear about. Bitcoin. Like you, I think I was, you know, part of my the bad end to my week last week, that I was a buyer of Bitcoin. As it started to fall, I think during the week and over the last few weeks, was probably a buyer around 89,000. That worked out quite well. Obviously, we went through that level on Friday, and I was looking to buy around 85,000. And I think, like a lot of people, got stopped out on a drop towards 80. And of course, you know, the very next day it recovers, and over the weekend it recovered, and it's recovered very well. And I think it touched 87,000 yesterday, although it's off of those levels once again. So maybe a bit about Bitcoin, what you were looking for when you were looking to get into a trade, and how that played out for you Friday, and what you think of it going forward.
Well, you've already got the levels. For me, 84,000 was the key level. It's a 38.2% fib. You can see I've got a couple of trend lines here. One goes back to the 4th of November. The other one goes back, a little bit further. That goes back to, that one goes back to the 18th of September. So we had two intersecting trend lines. We had the 100-day moving average. We had the 23.6% Fibonacci level, all pretty much around 85,000, 84,000. So yeah, I was also getting in at that level, and I did get stopped out. Maybe my stop was too tight, but we got down to 8,500. I'm not back in again yet, so I'm missing this bounce. As you can see, we're just pulling back a bit now. I'm going to try and sit, because I think there is a good chance that level. Well, I could say it held. I can say it was overrun, and it certainly triggered some stops. And so now on the 4-hour chart, I've just got this little descending channel in the very short term. We've hit the upper trend line. Maybe we'll come back down and retest the low, but I'm waiting for a break of this trend line, which is roughly around 87,000 right now. Then I'm going to jump in.
So it's definitely wait and see with Bitcoin at the moment. What about gold, Jason? Seems to be a lot of sideways movement with gold. I mean, I know that the ranges have expanded a lot with the increase in price. So we're seeing bigger moves during the day, but the band is holding fairly strong.
Yep, I can't say any more than that. You've nailed it. What's key for me? Well, we're in this. I've got a triangle pattern, so we're in a sideways consolidation, and it looks like the volatility is decreasing. What's interesting is on the last 1, 2, 3, 4, 5 days. So all of last week actually, we opened, we probed up, we probed down, and we closed mostly unchanged. These are called doji candles, where there's a small body and long wicks showing that the market moved up and down but closed near the open. It just emphasizes to me the fact that there is no conviction from bulls or bears. No one's trying to gain control of the market. It's just sideways, and for me it's not a market that I can trade.
Okay, and you mentioned already with the indices you see some strong signs there of markets maybe of hitting a bottom and recovering from those levels. It's Thanksgiving week this week as well, so it's a holiday shortened week, and obviously a lot of traders are away from their desks. Well, they're all away Thursday, and a lot of them are away Friday as they take a long weekend. So what are you seeing there with the US indices going forward? Okay, sorry about that. I just realised that the sun was pretty bright here today, so I've just had to move my laptop a little bit so that we can listen to this last bit from Jason. So we're talking about the US indices in particular. Volatile week last week, bouncing all over the place. Certainly caught me out on Thursday. But you said earlier in this piece, Jason, that you saw some signs that we're hitting a bottom and possibly recovering. Some good signs there. Fibonacci trend lines, I'm sure. So let's hear what you think of those. Okay,
Nick. Well, first thing to mention is on the Nasdaq, I think we have a head and shoulders pattern. So this is the left shoulder, the head. This is the right shoulder. The break of the neckline was a little bit messy because we broke back up through it on the NVIDIA numbers, but that gain wasn't sustained for long. So that is a bearish pattern, but that's kind of being overridden right now with the support level that I've got. So we did fall from the head and shoulders neckline, but we've got a trend line going back to July 2024 here. And that you can see was tested on Friday. We've got the 23.6% Fibonacci from the whole move up from 16,460. I'm going to quickly go to the daily chart here where you can see the trend lines and the Fibonacci level as well. We've got the 100-day moving average around 24,280. So we blipped below that, hit the trend line, hit the Fib, and we've bounced off it. So for me, right now, I'm feeling bullish. I think that the correction at this stage, at least, is done, and we're going to have a decent bounce back, probably to at least 25,000. And then it depends on whether that holds as resistance and we go down and maybe break this low, or whether we break above it and continue up to retest the all-time high.
Okay, all right. Look, holiday shortened week, so we'll see if there is a reduction in volatility. Certainly, as we go towards the weekend trading period, the volumes will, I'm sure, start to reduce throughout the course of the week, which adds its own difficulties. But thank you very much for joining us, Jason. Again, with your insight into the markets, and we look forward to speaking again very soon.
Cheers, Nick. Thanks very much.
Cheers, mate.